Is the Prescott housing market about to crash?
Oh no!
Maybe you're seeing scary headlines from all over the country, but what's really happening? Hi everyone, I'm Jessica.
And I'm Lisa.
And today we're breaking down the real stats, talking about the myths and letting you know what really matters, especially here in the Prescott area. Stick around and by the end, you'll know whether to hold tight or make your move.
First, let's look at the national market and the headlines. The U.S. housing market isn't crashing, but it is shifting. At least that's what we think based on our market here in Prescott. But let us remind you, nobody, including us, has a crystal ball. If we did, do you think we'd be here? So nationally, the median home price set a new record in June at $435,000. Housing inventory is up over 30%, hitting levels we haven't seen since 2007. And some of us have been in the real estate market that long, although we may hate to admit it. New home sales in the United States rose modestly in June, but remain at 6.6% below last year. Mortgage rates have eased slightly to around 6.74%, still high, but let's check out this chart and go as far back as the 70s. During the 70s, the rates were 8 to 9% due to rising inflation and the energy crisis. Some of us remember being in line at gas stations for hours just to fill your gas tank. During the 80s, rates were 12 to 14% and peaked at 18% due to the Fed's anti-inflation policies. In the 90s, there was a gradual decline to 7 to 9% after the high inflation era. In the 2000s, rates were 5 to 6% pre-2008, followed by the financial crisis. In the 2010s, rates were 3 to 4% after the Great Recession. And of course, in the 2020s is when we saw the pandemic era lows at 3 to 5% as well. The bottom line, the market is cooling, not collapsing. Many experts agree there's no 2008 type of crash on the horizon.
Here are some myths and misconceptions. It's easy to believe that prices are collapsing, but they're not. What they are doing is softening and correcting, but not collapsing. Foreclosures are coming back? Also false. Delinquency and foreclosure rates are still close to an all-time low. In fact, we pulled the latest foreclosure report for Yavapai County, and as of the end of July, there were 46 foreclosures, with some of the property's original mortgages dating back to the late 1990s. Now, we don't know for sure, but looking at some of the details, approximately 15 of those foreclosures are reverse mortgages where owners have passed away and the bank is taking back the property. 18 of the foreclosures showed mortgages obtained during the COVID years, when the real estate market exploded. And the rest of the foreclosures could be anything from job loss to death of the owner. And keep in mind, these foreclosure numbers reflect all of Yavapai County, not just Prescott, and includes homes as well as land.
Another myth? No one can afford to buy. Rates are up, yes, but buyers are still out there making plays, especially if a home is priced correctly. If a home is not priced correctly, it will sit on the market. Generally, we see from 150 to 200 homes go under contract every week, and we see nearly 100 homes close escrow every week as well. And they're not all cash deals. About 55% of homes closed in the last week of July were financed. Here are some facts about the economy and what people are feeling. The United States jobless claims are at a 3-month low, showing a still healthy economy. Foreclosure rates are low, so there's no subprime mess. Most people have equity, so there's no panic. That said, emotionally they're stressed. Sellers are still overpricing and buyers are still hesitating. And that mindset of overpricing your home like it's 2021, it's costly. We had a seller list a Prescott Valley home $50,000 higher than it should have been listed. It sat and sat until they finally reduced the price 3 times, and it still sold for lower than if we had priced it right initially, because by that time it was stale. But buyers, here's a fun reality check. This pause is your window. More homes on the market, less competition, and more negotiating power. Sellers, you can still win, but only if you price your home for the actual market we're in right now, not what you want the market to be.
Okay, let's zoom in on Prescott because local markets tell their own story. According to the Prescott Area Association of Realtors, the median sold price in June was $640,000, up 0.8% year over year. The median listing price was $727,000, virtually flat year over year. Homes are sitting longer, 63 days on average, up from 45 days in 2024. Redfin reports a 12.6% year-over-year drop to $567,000, but Zillow shows a mild 1% fall to $610,000. So these websites calculate a little differently than our actual MLS. Yavapai County data shows Prescott down 3.2% to $635,000 and Prescott Valley down 2.8% to $485,000. So yes, the Prescott area is seeing a correction, but it's not a crash. Sellers are making reductions on their overpriced homes and they are having to make more than one price reduction. Sales are slower, buyers are cautious, but prices are stabilizing.
Here are some tips for buyers and sellers. Buyers, use this window for better deals, but don't wait for the crash that's probably not coming. Sellers, price your home right from day one. If you want to test the market, go ahead for maybe 2 weeks, then adjust your price quickly to what it should be. Don't get stuck. For both buyers and sellers, don't let the fear of missing out or just plain fear sell you short or hold you hostage. Okay, how about a prediction? Yep, we used a crystal ball for a second while you weren't looking. Mortgage rates may dip slightly later this year, but they will likely stay above 6%. Nationally, home prices might dip 1 to 3% before rebounding. Prescott is a great long-term hold due to quality of life, tight inventory, and diverse buyers. So, is the real estate market crashing? We don't think so, but it is cooling, and you need to know where and when to act.
If you're buying or selling in the Prescott area, we'd love to guide your journey. Drop your questions in the comments, hit the like button, and subscribe for real local market breakdowns. And check the description for a free home value report or personalized market insights. Let's make your next move your best move together. Thanks for watching, and we'll see you in the next one.
Bye.
Bye.